Hello everybody. This morning I'm going to make a focus on three topics. The first one will be an update on what's happening on the bond markets with persistent strength on government bonds. So I will just show you one chart, which is the chart of US 10-year bond yields. Then we are going to focus on what's happening on Euro Stoxx 50 and S&P 500. I will also show you the chart of the DAX 30 index. So we're going to what we saw this week is an obvious upside breakout on all of these indices. Then we are going to end with what's happening on the Bitcoin with the start of a consolidation process. So first of all, US 10-year bond yields. So as I discussed a lot over the last few weeks, US 10-year bond yields were trying to stabilize around 2%, a very important technical support. You can see that it was a 61.8% retracement of the 2016-2018 uptrend. And it was also the support zone hit in mid-2017. So we saw a few weeks of stabilization around this level, no strong recovery from this technical support. Then even this week a breakdown, so a continuation of the bull trend on T-notes, which is a downtrend on US bond yields. And now you can see that the next level is around 180%, which is the next Fibonacci support. Also interesting, quite interesting, you can see that the weekly RSI, so this is the 14-week RSI, it's deeply oversold but unable yields are unable to start a significant technical bounce. So we continue to see oversold conditions but a continuation of the downtrend. Now if we switch to equity markets, I mentioned you last week very strong resistance on the S&P 500 around this level, so around previous highs. You can see this line, and as I told you, I was favoring a new wave down called the wave C to start in July with a stop loss if we break above this line. And obviously what we made last week, so especially on Monday morning, we had a bullish breakout above this line with a gap. You can see this gap, so when we had the breakout, so the gap was around 29.50 and a breakout. So it means that if you are playing a correction of the S&P 500 in the short term, this scenario is obviously invalidated. So it's hard to justify renewed weakness from here because the market is not confirming this scenario. I'm not telling you we are going to see a 10 to 20% upside, but what I'm telling you is that obviously the market remains pretty strong. We had a bullish signal this week, so bears should be very, very cautious from here. Even though the market is overbought, as you know, that's not enough to have overbought conditions to trigger a significant trend reversal. So if you're a trend follower, you can stay long, but I would put a stop loss around the lower part of this gap, which means around 29.50. The lowest stop level I would suggest is 2900 for midterm players. So as long as the index is still trading above these levels, I would say that the technical outlook remains pretty strong. Same comment on DAX. So DAX was challenging since a couple of weeks. An important resistance zone around 12,300, 12,400, between 12,400, 500. You can see it was not a precise level. But anyway, once again, we had a quite powerful upside breakout on Monday morning with a bullish gap as well, and now the next resistance is around 12,800 more or less, and we can see even potentially higher in a medium term. So once again we can see that the short-term bear case, which is A, B and C, is temporarily invalidated. We will see how high European indices can go in the short term, but yeah, as you can see, the next resistance right now is still a bit higher. Same comment on Euro Stoxx 50. We can see here the chart of the MSCFP ETF, so which is the Euro Stoxx 50. Why do I show you the chart of the ETF and not the chart of the cash index? It's simply because this ETF, as you know, includes dividends, and for me it's much better to look at the ETF than at the index. DAX, by the way, as you know as well, is dividend included, which is why I show you DAX index and also MSCFP. So once again, MSCFP broke above important resistance zone this week. You can see that the tracker managed to surpass for the first time in 2 years above an important resistance zone, so which corresponds to the previous high of 2017-2018. So a significant technical breakout this week. Once again, I'm not telling you it's going to be a massive upside move, but what I'm telling you right now is that we have obviously a technical breakout, obviously a strong market, and a dangerous market for contrarian investors. So you can see here, for example, in late 2017, that all breakouts do not lead to strong upside acceleration. Sometimes it's a trap. We saw that over the last 2 years we had a lot of traps, but sometimes the signal is correct. So you can see, for example, this amazing bullish signal in late 2016. So right now I'm not able to tell you if it's going to be a good signal or not, but what I'm telling you is that we have obviously a quite clear technical signal. Once again, if you do trend following and are keen to place this breakout, I would suggest to put a stop near the lower part of the gap open on Monday morning, which means around 34.50. Yeah, last comment on Euro Stoxx 50. As you can see, this market is overbought also on a weekly basis, but less overbought than bond market. So we cannot say that the Euro Stoxx 50 is massively overbought here. It's not true. Last comment I would like to make is on the Bitcoin. So 2 weeks ago I highlighted a very important resistance around, you can see that around 13,255, which was an important Fibonacci resistance, so a 61.8% retracement of the entire decline of last year. We can see that obviously the market did not ignore this level. So I think what's going to happen now on the Bitcoin, I mean, it's also very interesting to keep an eye on the Bitcoin, because for me it shows the level of defiance towards governments, US and European governments, and the fact that the Bitcoin, after a very speculative move, which reminds me what happened during the bubble of late 2017, we are seeing probably the start of a stabilization, of a range formation, the range being, you can see that here, between 10,000 and 13,255. So I think Bitcoin is going to stabilize in this range. I see that as good news for traditional risky assets, because it shows that, as I told you, the level of defiance towards government is declining. Thank you very much for listening, and have a sunny and relaxing weekend.